Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Khadijah. I will be I will have a short revision on the topic of inventory. I'll be using the question from the previous years. The topic is on inventory, but in this session, I will focus on how to do periodic rather than perpetual. So let's look into the question first. Question 3, we have Tem Toys Neighborhood is a wholesaler that imports toys from China and sells them to retailer in Malaysia and Singapore. In August 2024, the company started importing a new toy called Dancing Octopus or DO, and the company financial year ends on 30th September. Below are the transactions involving DO for August and September 2024. On August 9, the company imported 3,600 units of DO on credit from Mary Toy at RM6 per unit. August 23rd, sold 2,500 units of DO for cash to Adore Neighborhood at 11 ringgit per unit. September 2nd, imported 8,400 units of DO on credit from Mary Toy Private Limited at 5 ringgit and 50 cents per unit. On 18 September, sold 6,300 units of DO on credit to Sing Toy Private Limited at 40 ringgit per unit. 22nd of September, Sing Toy Private Limited returned 100 units of DO. On 30th September 2024, the company conducted a physical stock take and discovered that several units of DO were missing as only 3,260 units were found in the warehouse. Okay. So what happened is that required that A, assuming TTSB use perpetual inventory system and the first in, first out or FIFO method, calculate the values of the cost of goods sold and closing inventory. And you also are required to record the above transaction in the general journal. Question part B, assume TTSB using periodic inventory system and the weighted average method, calculate the value of the cost of goods sold and closing inventory, and record the above transaction in the general journal. So in the first part, all right, A requires you to do a perpetual inventory and the total marks is 12 marks. On the second part is using periodic inventory system, weighted average 8 marks. So based on this question, all right, the same question, you are required to do two systems. The first one requires perpetual, FIFO. The second one requires periodic weighted average. So for the first part, all right, you are required to do perpetual. So I believe that most students have no problem with perpetual because under perpetual, normally you are required to do prepare a table of inventory movement that you have this column where you have the purchases on the quantity, unit, and total. And you also have the cost of goods sold, quantity, unit, and total. And the balance also based on quantity, unit, price, and total. So using a FIFO, or in this case, there's no opening balance. So you are going to record the movement of the inventory based on the information provided in the question. So for example, first you are going to purchase, or under purchases, you have import 3,600 unit and each one costs you 6 ringgit per unit. Yeah. And then on the 23rd of August, you're going to sell, because the table is already given in just 9. No, this one is just an example, yeah, not the date it happened that this one's 9. And then on 23rd of August, you sell, so that one will be under cost of goods sold. How many units? 2,500 units. And then you have to decide what will be the selling, what is the unit price for the goods sold. All right, I believe that this one is because you only have the first 3,006 purchased at 6. So this sold unit is 2,005 at 6 ringgit also. So you have to put on the balance of how many more? 1,100 units balance at 6 ringgit per unit. All right, so you are going to draw this table for your perpetual under FIFO. All right, so since perpetual is not my main objective today, I would like to go for the second question, which is the periodic inventory system. I noted that even the periodic system is supposed to be the easier, all right, because it's meant for smaller business, right? But students have some confusion on how to actually prepare the periodic inventory system. All right, and in this question, it requires you to use weighted average. All right, so for periodic, so let's go zoom into periodic. So how are you going to use a periodic inventory system for you to answer this question? All right, whether is it a weighted average, whether it's a FIFO or LIFO, to for a periodic inventory system, first thing that you have to do is that there are few steps here. All right. First is that you have to determine the quantity of the goods available. All right. Based on the information provided, what are the available goods in the business? Yeah, quantity of available goods. This is actually based on your opening stock and your purchases. All right. So first you're going to decide how much is your opening stock, and then you add on the purchases, how many on the date of the purchases and how many units purchased and the cost per unit according to the dates, right? So you may have to write down all these purchases and purchases. From this you get your goods available. All right, your goods available is your opening stock plus your purchases. These are the goods available in the business for you to sell. All right, so that is your goods available. So you plug in the information. For example, the goods available here, for example, you don't have any opening stock, but then you have the purchases imported from your DO, and then you also imported on the September, imported another one, 8,004, 5.50. All right, so there's only two. Yeah, there are only two transactions here. But never mind, we'll look the question later, but let's look into the steps first. All right. So once you have decided, you have determined how much is the goods available. Now you also have to decide, number two is that how to determine the quantity of the goods sold based on the sales of the goods. Yeah, goods sold. So how you decide on that? So whatever goods sold, you have to write down the goods sold here. All right. In this case, we are not very concerned about the cost. We're only concerned about the quantity. All right. Because for periodic, we cannot decide on that yet. So just put the date and the quantity, all right, on the goods sold. And in this case also, sometimes there's also a goods return, all right. For example, in the question, there's a goods return. So that will also be included under here, yeah. So this is actually to determine what is your goods sold, yeah, cost of goods sold. But in this case, goods sold here, in this case, I would say that let's put it as a goods sold lah, yeah, rather than the cost, because we are not determining the cost yet, only the number of unit which is sold. All right, and then that include goods return. So if you sell, oh, I have one student. All right, if you sell, then goods return could be bring in the inventory come back to the business, yeah. So you have to do some adjustment there. And also we are going to include also the stock loss, because they will determine how many goods which is no longer in the business, yeah. So that is part of the goods sold. And from there, you're going to determine your stock, right? Your closing stock is actually how much available and then how much you sold. So the balance is your closing stock. Yeah. So here is your goods available from your opening stock and purchases. You see you have your goods available, the number of units, yeah, the quantity here. And then you minus your goods sold, all right, then you should have your closing stock. All right. So closing stock again is your goods available minus your goods sold. So from here you have one amount, which is the goods sold, total amount of goods sold. Here is also one amount. Yeah. So you will have to do this later. Okay. So these are the going to be the formula that we are going to use, all right, in the in attempting the question. All right. So coming back here, so let's put into the information here. All right. So if you already understand, this is the opening stock. For example, this is for periodic. All right. First thing is that you have to decide on the quantity of your goods available, quantity of the goods sold, and then the quantity of your closing stock. All right, and the periodic. Then only based on the inventory method, whether it's a FIFO, LIFO, or weighted average, all right, based on the information you get from 1, 2, and 3, you're going to compute the value of your closing stock and your COGS based on the method, whether it's a FIFO, LIFO, or weighted average. All right, so you have to do step 1, 2, 3 first, all right, to decide on these goods available, goods sold, and closing stock. Then only using this information, all right, you are going to determine what would be your cost of goods sold as well as the value of your closing stock. All right. So now let's go into this again. So we are going to plug in the information here. All right. So for example, here I have prepared the table where I have my opening stock and my purchases and then my sales here. Yeah. So let's do into this. For example, here. All right. So if you have to go information, for example, on August 9, all right, you import 3,600 unit of toys from the cost is 6 ringgit per unit. So you plug in that information. You do not have any opening stock, so you can just don't have any value for your opening stock here. But you have purchases on 9th of September and the value of the purchases is 3,000 units, 3,600 units, and each one costs you how much? Is a 6 ringgit. So you plug in that information. So 3,006 times by 6, you want to get that. All right, you just put that amount. Okay, or maybe you want to put in that. All right, so you have 21,600. And then you sold 2005 on 23rd of August. You sold 2005 at 11 ringgit. I mentioned earlier for sold, you only want to put in that amount of 2,500 unit. And then you do not want to put the cost because that's not the way we are doing. We only want to identify the value, the number of quantity, yeah, for your for the sales on 23rd of August. And then on 2nd September, you imported another 8,400 at 5 ringgit 550 cent. So 2nd September, you imported 8,005 and each one cost you 5,005 and the total cost would be 46.2. Okay. And then on 18th September, you have sold 6,300 units. And 18th September, you want to put in that units number, 6,003. All right. And then what else you have? Then you have a return of 100 units. So return here, sales here. So when you have a return, it's a contra. So if here, if you put sales of 2005, all right, so maybe if this is confusing, all right, let me put it like this. Let me put it like this, all right, 2005 and 6,003. So if there's a return, then you put a minus. So it means that you have sold this amount and then there's a return of 100. Okay, so that is a contra of how many units that have been sold. All right, it reduced by 100 units when there's a sales return. On September 30th, the company conducted a physical stock take and discovered that several units of DO were missing as only 3,260 were found in the warehouse. So in this case, all right, you know that um, the closing stock is actually given to you, right? So the closing stock of 3,260 is actually given to you under periodic in this question. But in other question, they may not give you the answer. You may have to find what is your closing stock. All right. So example in this case is that we have in this case how many goods available. Goods available is in this case 12,000, and goods sold in this case is 8,660. So how sorry, this one I have to put a minus here. All right. But in this case, remember that when there is I put it here, all right, whenever there's a stock loss, you want to put that into part of the sales, all right, because the goods assume that it is sold actually, yeah. But in this case, you were given that in this case, you were given that your closing stock, hold on, yeah. Your closing stock was given as 3260. What? Okay, let me see. It was given that your closing stock is given as 3260. So you, rather than you find out your closing stock, it was given to you as 3260. Right? So that is the amount of your closing stock. So let's look into this because the question is a bit different. All right. So what I have here is that, for example, normally, all right, when I want to look for my closing stock is that I will have to have my goods available minus goods sold. So I will have my closing stock. So for example, in this case, my goods available is 12,000 minus my goods sold is 8660. My closing stock should be 3340. Right? However, it was informed that my closing stock, instead of 3340, my closing stock is only how much is it? 3260. Okay, so 326. Why am I? Yeah. So in this case, not the number, yeah, the unit that was given to me was 3260. But in this case, I have 3340 here. Right? So what happened here then? What's the difference between 3340 and 3260? There should be a amount of 80 units. So what is this 80 units represent? All right. So it means that if you have goods available 12,000, but you only sell this amount of 8660, but in your closing stock, when you do your stock take, there's only 3260. So there's a difference of 80 units based on the formula. All right, there should be 3340, but actual physical stock only 3260. So the difference of these 80 units is what we call the stock loss. All right, so how are we going to put that into a stock loss? We are going to put, hold on, this is the formula I have to use. Okay, now I get it. Okay, because I have that figure there. All right, so by right, my closing stock is 3,300. Again, sorry, my apology. Right, so it means that my goods available is 12,000. But then because of my sales of 2005, and then I have another sale of 6003, but there's a sales return of 100, my goods sold should be 8,700. So based on this, my closing stock should be 3,003. So how do I get 3,003? It's my goods available minus my goods sold, 3,003. But then it was found that my closing stock here is only 3260, and the difference is 40 units. So these 40 units represent good loss. All right, or we call it as a there's a, it could be an obsolete, it could be theft, it could be broken or whatever lah. So this 40 will be reflected in the, it will be reflected in the, so it should be 40 here. Okay. Stock loss in that as if, so your closing stock is reduced as if that amount is sold. That's why your goods sold now increased by 40. Okay. So let's not be so confused about that. So what happened now is that once you have your closing stock, okay, then only you decide under periodic. Once you have your goods available, your goods sold, and your closing stock. So this is the amount that you're going to use, all right, for your computation of to determine how much is your what I say value of your closing stock and your goods sold. Right? So for if you're using average cost, so average cost is the cost of the goods available here. All right. You have to look into the total cost here. So for your purchases goods available, the total value is 67,800, and the goods that you purchased was 12,000. So the average cost of stock is your total over quantity. In this case, you should get 5 ringgit and 65 cents. Right, so using that amount, all right, you're going to compute your COGS. The unit is 8740. Where do you get that from? Is from here. All right, 8740 is from the computation here, times by cost per unit is 5.65. Your total is 49,381. Right, but we have closing stock here is based on 3260 times by 5.65, which is the average cost. So your closing stock, where you get that figure from? From the computation above. 3260 times by 5.65, that is your closing stock, 18.419, using weighted average. Right, so how to compute the weighted average? Then you have to put your total cost here of your goods purchases, or if you have balances, then that total cost of goods available is included. Right, so goods available divided by the number of units, you get average cost per unit. Use that average cost per unit to compute the totality of your cost of goods sold and the closing stock based on the number that you have derived from the computation here. Okay, if you're using FIFO, right? FIFO here, you see that based on the movement of the inventory, first in, first out, right? So your closing, your cost of goods sold will be based on the earliest cost. So when you sell 8,704 unit, 8,740 units, all right, goods sold. All right, how to decide on the cost? You have to look back into here. The cost will be based on the first one. You sell 3,000 units at 6 ringgit per unit. So using FIFO, that's how you have to do. You have to take for the sell at 3,000 seats, and the balance, how do you get the balance? 8,740. You have sold 3,000 units at 6 ringgit, means that the balance would be 5,140. So total these two, you get back to 8,740. But what will be the cost here? The cost now, it will be the later cost at 550. So you sold, goods sold under first in, first out will be based on 6 ringgit first, followed by 550. So 3,000 seats first at 6 ringgit and the balance at 550. So your COGS under FIFO is 49,870. However, under FIFO, your closing stock will be based on the latest cost. The latest cost compared to here is 5.5. So if 5.5, you purchase 8,004, so it means that under FIFO, your 320 would be based on cost of 5.5, which is the latest. So you don't have anything behind because this one is actually what you have. Yeah. So that is your closing stock only at 5 ringgit and 50 cents. So that will be your closing stock. Right. Again, using FIFO, COGS is based on the earliest cost, and go back to your here. COGS, use 6 ringgit first, followed by 5 ringgit and 50 cents. But if you're using LIFO, that will be the other way around. All right, your COGS will be based on cost of goods sold. In this case, let me see. Where is my using LIFO? Where is it? Cost of goods sold. So how many cost of goods sold is the same as 8740, right? 8740, but you have to decide. And the LIFO, last in, first out. So how are you going to use last in, first out? Last in means that 5,500 here. So you are going to use the cost of 87, but then you only have purchased 8,400 units there. So 8,004, which is, you can actually get it from here, right? Command C, I will take this as 8,004 units from the, you sell the latest first. So the balance would be how many units? How many? 340 would be at 6 ringgit, right? So command C, command V. So your cost would be, in this case, is your cost of goods sold, and total amount would be 48. Right? So that is your cost of goods sold. But under, what is this? This is your, I'm not sure why is it not coming up. But closing stock, right? Command C. Under FIFO, your closing stock would be based on the earlier, right? Earliest, right? Earliest cost. In this case, you only have two. That is it. Earliest cost. So how many units of your closing stock is actually 3260. All right, so your 3260 under LIFO, the first one you purchased 3,600 at 500, so means that you should get that 3260, all right, at, what is it, plus this, at 6. Right, why is it not coming up? All right, so that is your command book. So that will be your closing stock under FIFO. So you have to understand that based on the latest cost. Yeah. But the if FIFO, your closing stock is based on your cost of goods sold is based on the earliest cost. Again, wrong spelling. But this one is on the latest cost. Right, a closing stock. So I think that that is your periodic, either is under weighted, FIFO or LIFO. Again, right, under periodic, first you have to determine what is the quantity of the goods available, quantity of the goods sold, and then determine quantity of your closing stock. So remember that in this question, because there's a trick here where you have that sales return and also there is a stock loss here, right? So that stock loss that be part of your goods sold. Yeah, so that we know that how many units left, all right, in the business. So you determine the quantity first. Once you have that amount, then only you will plug in the information regarding to the cost, how to decide on the cost. If it's an average cost, then you have to find the average cost per unit based on your goods available. If it's a FIFO, first in, first out, then you have to look at the using FIFO, cost of goods sold is based on your earliest cost, but the closing stock is the latest cost. But if LIFO, which is not recognized, yeah, by the accounting standard, LIFO, the COGS will be based on the latest cost and the closing stock is based on the earliest cost, right? So I think that is for today on the how to actually to prepare periodic under whether it's a weighted FIFO or LIFO. I hope that this a bit of revision. I'm sorry that we were a bit confused on this amount just now. This one is the stock loss. All right. This is what I put here. Sales return, and this one is your stock loss. Yeah. So that represents sales return, and this one is your sales. And then remember that you have to put into journal as well. All right. A journal, record the transaction in general journal. So if you look into the question here, the answer here under periodic. So when you make purchases, all right, debit your purchases and credit your trade payable. All right. This is cash sales. And then when you make again purchases, debit purchases, credit payable, and then make sales another sales. But then when you have your sales return, debit your sales return account and credit your receivable. In this case, your trade receivable. And then we're also going to record your inventory. In this case, 18. What is this inventory? This is your cost of goods sold. Yeah, cost of goods sold is 18,419. How do you get that? Right, if you look into my answer, I hope that I get the closing stock correct, 18,419 here, yeah, and the weighted average. And you also have to record the stock loss, all right, debit your COGS and credit your inventory. Okay, so this one is the inventory, movement of inventory, because debit is a loss. Inventory means that they reduce your inventory by 226. depending on, in this case, the cost, the weighted average cost. Yeah. Okay. So I think that's all for today. All right. Thank you again for watching. I hope that this is beneficial. All right. I apologize if there is a confusion, but let me know if you need further information, or if you need further help on clarification of the periodic inventory system. With that, thank you again, and Assalamualaikum warahmatullahi wabarakatuh.